Hey traders, Mike here. Welcome back to my channel where I profile the top traders in the world and teach you how to replicate their incredible success. Now, a few months ago, I came across this article where a university student made over $110 million just trading a meme stock. Now, some of you may remember in my past videos that I covered how the trader made over $40 million or how a hedge fund made over $700 million. Now, both made money trading the popular meme stock GameStop. Now, for this young trader named Jake Freeman, he made money trading the meme stock Bed Bath & Beyond, an American retail chain of homeware stores. So in this video, I'm going to talk about how Jake was able to make over $100 million in profits and how he timed this trade perfectly. So let's get started. Now, Jake is a 20-year-old university student who is an applied math and economics major at the University of Southern California. However, he's not just a normal college student, but rather he's also the chief of Freeman Capital Management, a registered investment advisory firm. Now, prior to starting his own firm, Jake spent the past few years interning at ex-Credit Suisse trader Vivek Kapar Valeris Capital Management, where he and Vivek jointly published a paper called Irreducible Risk of Hedging a Bond with a Default Swap, when Jake was only 16 years old. In fact, Jake became interested in finance at the ripe age of 12 and already began working in the industry at 14 years old. His first project was analyzing the performance and cost of tail risk hedges on retail portfolios. Now, with his finance background and trust from backers, Jack managed to raise more than $25 million for his initial investment fund from friends and family and set out to bet big on just one particular company, Bed Bath & Beyond. So in July of this year, according to regulatory filings, Jake's fund acquired nearly 5 million shares in the company at prices under $5.50 per share. Now, this purchase was after the company reported dismal earnings and the ousting of its chief executive, which sent its stock price plummeting. Now, whether due to pure luck, less than a month later, Bed Bath & Beyond stock surged to as high as $30 a share on August 17th. Now, as the stock price soared, Jack sold his entire position in the stock for average prices around $27 per share from his TD Ameritrade and Interactive Brokers accounts. His $25 million stake in Bed Bath & Beyond had turned into a profit of over $110 million, a more than 440% return on his investment. Now, Jake certainly did not expect the stock to go up so fast and thought this was going to be at least a 6 months plus play. In fact, from a valuation standpoint, he thought the stock price might just go to only $8 or $9 a share. But this was a case of being in the right place at the right time, because soon after his selling his entire stake, shares of Bed Bath & Beyond fell over 17% after Ryan Cohen, GameStop's chair and a large shareholder of Bed Bath & Beyond, disclosed that he was planning to sell his entire stake of almost 12% in the company. Now, Jack's rationale to sell out of his entire position was due to the fact that at these elevated stock price levels, the company's valuation was just far too beyond its intrinsic value, and the stock wasn't worth it from a risk to reward standpoint. At today's current market price, Bed Bath & Beyond shares are worth less than $3 per share. Before I share with you the trading strategy that led to Jake buying Bed Bath & Beyond stock, please smash that like button and hit subscribe if you haven't already. I would really appreciate it. Okay, now not every day that you see an investment fund manager go all in on one company's stock, let alone a speculative one, and have your investors be comfortable putting $25 million at risk. So let's try to understand what Jake was thinking. First off, Bed Bath & Beyond's company fundamentals were terrible. The company reported sales had plunged 25% in the second quarter in 2022 compared with the same period last year, while its loss widened to $358 million from $51 million. Its cash position had dwindled to $107 million from $1 billion at the start of the year. Now, any investor who saw these results would only see a sinking ship. However, Jake saw a depressed retailer who he buy cheap and felt that it could withstand the current slowing economy. He reasoned that consumers would still need basic items like towels and bedsheets. More importantly, he calculated based on the company's low market value that it appeared to be already priced for bankruptcy. He believed the correct change to the company's capital structure would lessen that danger and unlock significant upside. Most importantly, if the company could survive, he would reap a significant profit from his investment. However, it wasn't the company fundamentals that led to its stock price surge, but rather what ended up working in his favor was a short squeeze generated by retail investors. You see, Bed Bath & Beyond was one of a handful of meme stocks that became popular at the start of 2021, along with GameStop, the video game retailer, and AMC, the cinema chain. Now, the increase in these companies' share prices have been driven by interest from retail investors attracted by the stock's small free float and a significant number of short sellers betting that the stock price will fall down. Now, these two scenarios apply to Bed Bath & Beyond stock, as data showed that even though the stock had 80 million shares outstanding, which was already pretty low, there were only 24 million shares in the float, meaning those were the shares that were publicly available to trade. Lastly, 84% of the shares that were in the float of 24 million shares were all betting that the stock price would go down. So the scenario was retail traders who tried to engineer a short squeeze by buying as many shares of the stock, which would drive the share price higher and force the professional traders who were short the stock to unwind their bearish positions, would only propel the stock price to go even higher. And this strategy worked to a T, as over a 9-day trading period, the stock price rose over 500%. So did Jake Freeman just get lucky on his concentrated bet on a volatile meme stock, or was it due to his ability to identify undervalued and unloved companies? Now tell me in the question box below, what do you think? Thanks for watching. If you like this video about Jake Freeman, you can click on the left to watch other videos where I profile other top traders in the world, or click on the right to watch the full playlist. I'll see you guys in the next video.